Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, April 9th, 2013. Well, a continuation of the trend to the upside today. A candle that's made a higher high and a higher low and a white bodied candle. We're now seeing the buyers come back into this market and a solid bullish close up above the 1577 level of previous support and resistance, and it does suggest that this market may follow through and trade to higher levels. Previous day's trading, we had a black body candle with the sellers attempting to take control. The sellers made net bearish progress. Today, quite the opposite, with a white body candle. The buyers have found some more upside momentum. They've made some decent net bullish progress between the open and the close, and it does suggest that this market has good potential to trade to the 1600 round number level of resistance. We've seen the buyers close with control of this market. They've closed between the midpoint level and the high, so not strong control, but moderately strong control. And that also adds weight to the potential for the market to test up to around this 1600 level. If we look at the recent past here, however, as the market sold off down below the 1600 level over the a couple of weeks ago, the market did find support around the 1590 area on 1, 2, 3 occasions, and roughly just above there. The market today has tested 2 there, and there has been some slight price rejection, so that area is now holding as a form of resistance for this market. And if we are going to see continuation of this trend to the upside, that is an area that I'd like to see the market trading through in a bullish manner. So this area around 1590 is crucial to continuation of the trend to the upside. As I've mentioned, if we do rally above there, then we do have quite strong resistance around the 1600 round number, so the potential for this market to trade significantly higher is not great. We also have the cloud just above that 1600 level, adding weight to the amount of resistance that the market will experience at higher levels in the near future if we do trade up there. Now, in terms of the Fibonacci extension, and a significant day today with the market trading through the 100% level in a bullish manner, this suggests that there is good potential for this market to trade at higher levels. Our target is the 161.8% level at 1606, coincides with the bottom of the cloud, and does suggest that that will be very, very strong resistance if this market can rally further. In terms of the Fibonacci retracement, here today we're seeing the market interacting with the 61.8% level, and we saw the market rejected from that level. So that small shadow on the top represents the buyers losing commitment. So there is a small hint that we could see the market come off from this level. But looking at the strength of this candle, we're seeing the buyers still maintain control regardless of that slight lack of commitment that they had above that level. We're seeing no strength from the sellers, and this is suggesting that the market has better potential to trade to the upside through the 61.8% level than it does of trading to the downside and changing the trend. So likelihood is that the market will continue trending up regardless of this interaction with the 61.8% level. Although please remember that there's no definites in technical analysis. What we do need to do is watch the low of this current candle for a potential lower high and lower low. So that is very, very important considering this slight amount of rejection from the 61.8% level. Now, in terms of Ichimoku, we have a bearish bias in the long-term time frame with the market trading down below the cloud. We had a bearish breakout some time ago, and the market has been trading down below the cloud for a significant period of time. We saw the market rally to near the cloud in early February and then be rejected from there. A lot of indecisive trading around there and rejected in a very strong manner. And I suggest that obviously this area around the bottom of the cloud once again will act as very, very strong resistance. So obviously if you're considering going long, depending on your time frame. If you're trading in a longer time frame, you certainly don't want to be going long in this market. And a possible scenario would be that the market rallies to around this area. We see this indecisive trading, and then we see another sell-off. Now, if we do see that sell-off, however, we do have strong support below. Now, this zone that I've highlighted from 1559 down to 1523 has been strong support in the past, and if the market does sell off down to anywhere near that zone, there's a good likelihood that we will see buyers come in back around that region, so be aware of that. But looking at the medium and fast term timeframes, this market is bullish in both of those timeframes by trading up above the Kijun-sen, the pink line, and the Tenkan-sen. And this solid bullish close up above these indicators does suggest that the market has good potential to at least trade up to this 1600 round number level. So if you're a trader in the very short term time frame, then that is possibly a better scenario rather than the longer time frame. So moving forward, with this bullishness in the market at the moment, and continued bullishness from what we saw a couple of trading periods ago, we do need to watch the high of the current candle for a strong potential continuation of the trend to the upside. Look for a higher high and a higher low. Very strong support just below where the market's trading at 1577, coincides with where the Kijun-sen is trading at the moment. Very strong support extending down to 1559 and beyond. More likely scenario is that the market continues rallying, finds resistance around the 1600 level, and then we see the sellers come in.